Hey, good morning, everybody. Welcome to the Ankerstar Wealth Morning Show. It is Tuesday, August 27th, nearing the end of August, nearing the end of summer, and we've got some fun topics for you today. Mike has what he calls a hodgepodge of information to pass on to you today. We're going to talk about overall what's the market doing today, and then he's going to talk about his favorite, not only company, but CEO. NVDA has earnings this week, so elaborate on that a little bit. And then we're going to talk about if you consider like NVIDIA like best of breed and stuff, then you have TAMU or TMU. I don't even know how to say it, but I do know that my kids order stuff off of it. Their parent owner, PDD, which is Pinduoduo, Chinese firm, they released earnings yesterday. It did not go well for them. Michael, peel that back for us. And then lastly, Michael talk about Eli Lilly out this morning with a half price drug, which is, I think, good news. I haven't looked at the stock chart, but I would imagine it's moving higher. And then I will conclude with the some of the clearing up some of the misconceptions about the tax plans going forth from Kamala Harris and her team. They're getting, there's all kinds of crazy stuff in the air. Some of it's not true, some of it's legit. So I'm going to help you sort through that. But this is a financial education presentation. You have to do your own due diligence for acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com, and the opinions expressed are mine and Mike's alone. Let's start with Mike.
All right. And I know that everything that comes out of those conventions actually happens, right? No.
Right.
Just while we were on this call, while Steve started it, I saw the Dow flip from red to green and back to red again. So that tells you it is pretty much right where it started. It's down 0.02%. And the market is not doing much today. A little bit of sell-off in the Russell 2000. The rest just normal noise. We'll see what the market does the rest of the day. But what the market will do tomorrow, actually the news, NVIDIA has earnings coming out after the bell tomorrow. So really it's what's going to happen on Thursday. But I saw this article, NVIDIA has become the world's most important stock, adding pressure to the earnings report. So they come out tomorrow afternoon, and I expect Thursday, market's going to either be up or down. Guess what? That happens every day. But NVIDIA, could blow out earnings like they did the previous 2 quarters, which, no one could expect they could blow it out that much. Could they do it 3 times in a row? We'll find out. Or, they may disappoint a little bit, who knows, and sell off a little bit. So we will see. I just started the hype already. I know we'll be talking about this thing on Thursday morning. So Steve mentioned Temu, and I don't know how it's pronounced either. I just know the packages show up at my door. I've never ordered anything from them. The kids order them. I'm like, let me see. What are you guys ordering from China? Is it really cost effective to ship things all the way from China that are like dollars? Well, Temu found out that I guess it isn't profitable because their stocks sold off 30% yesterday. Temu's owned by PDD, Pinduoduo Holdings. And you may have been like, wow, this place is competing with Amazon. I better buy it. Some people thought that. And I guess if I'll pull this back and look at like a 1-year chart, and if you bought the stock a year ago, you're about right where you were. But you missed a run up to 150. So you see all those packages, and the lesson here is, and I'm going to scroll down here into their earnings. I mean, obviously they bring in revenue, but it's the price of revenue. And here's the part that makes me nervous if I'm the owner of a company. And it says, the company is prepared to accept short-term sacrifices in a potential decline in profitability as it invests heavily in areas like trust and safety. So what are they doing? They're getting you to use their app and to buy stuff so that you trust that when you buy something, it's going to show up, and they're losing money while they do it. And, typically this strategy, if you're going to be the least expensive company, the cheapest, we'll just call it the nice way, the cheapest company out there, this is your strategy. You're going to undercut everybody else. You're going to put it out there and put these other places out of business, or at least try to. And then you can raise your prices later on. It's a risky strategy. Doesn't work in the airline industry, and that's what they do all the time. And they take turns going bankrupt doing it. Is this the kind of stock I would want to own? No, I would not want to own this. I mean, of course, it was down 30%, so it's easy to say in hindsight, yeah, I missed a 30% loss because I was not invested in them. But companies that operate on this model are always have a very, very low profit margin, and there's always someone chomping at their heels to try to undercut them. So not a great market to be in. Whether you get a good deal or you get junk, I have no idea. I don't know. My kids are big fans, but I mean, they do order some stuff. So that's Temu, that's company PDD. It's really out of China, but you can buy it on the US stock exchange. So you like things getting discounted, you like things that are on sale. What about your weight loss medications? And I went right down here. I'll get the headline, but it's Eli Lilly to sell Zepbound option for half price of injection pens. Now, I've never used an injection pen on myself. That sounds a little uncomfortable. Maybe Steve has. But what they're going to do now is you can buy vials and get them expensive, and then measure it out and inject yourself. And I imagine there's people out there that already do this with other medications, and maybe that sounds, well, that's fine. For me as a consumer, would I do this? I don't know about injecting myself and measuring things out in medication. That sounds like things that doctors and nurses do. So why would they do this? Couple reasons. One is the current list price is a little bit over $1,000, and obviously insurance has a negotiating part of that. And what Eli Lilly is trying to do is go direct to the consumer. So cut the insurance company out. Let's get them out of the middle. Let's find a price point that the consumer will pay. And I guess if the consumer is willing to pay $100 to belong to the Y and $100 for less healthy food, maybe they're willing to pay $400 for a little vial to inject themselves of weight loss magic. That's where they're going. Another part of this that I believe, this is my opinion, is if you get people using it and it actually does help them lose weight, they'll probably keep using it. So think of Eli Lilly, a responsible, great company, giving you your drugs, and now you're on those drugs the rest of your life, and you're willing to pay something for it. $400, maybe not $1,000. So that's where they're going. I did not pull up the stock price to see if it is up or down today. Let's see if I can pull this.
Yeah, it's up a couple percent. I saw it pop up earlier while you were talking.
Yeah. So a very big company up 1% is a decent sized move. But it'll be interesting where all of this goes. With the weight loss. I call it weight loss magic. There is, I could give you the prescription of diet and exercise, like they told us for the last 50 years. That works too, but it's a lot harder. So anyways, that's all I got. Back to you, Steve, and you can talk about what we're hearing from the convention.
Yeah, well, first of all, I have to say, you threw out some wisdom there, and I want to make sure that the viewers did not miss it, that Mike actually declared he went out on a limb to make a prediction, which he normally doesn't do. And he said after NVIDIA's earnings on Wednesday, the market would either be up or down on Thursday. So we're going to hold him to his words, and on Thursday, see if it is at least either up or down.
It will not be flat. It will not be flat.
It will not be flat, but you heard it here first. Tell all your friends. And then secondly, you do make, I wouldn't touch Pinduoduo either for lots of reasons. Country risk is probably one of the biggest. You have to lead with, okay, it's China, right? So there's some country risk there. But certainly, I will say one of my biggest whiffs in investing was staying out of Amazon for a long time, because I used to hold myself to my own personal investing, was you had to be profitable, and they were unprofitable. They ran in the red for 19 years. And that was kind of towards the end of that is where they saw that huge gain coming up. So there is some timing with that. And yes, companies do actually grow their way out of debt eventually, but I would not be betting on Temu. That's for sure. nor would I be betting on what you hear on TikTok. Mike, just back me up. Do you see the Kamala Harris article
I
on
do.
golf tax? Okay.
Yes.
All right. Making sure my tech works, which has gone sketchy lately. So a golf tax. Right now, I golf once, once a year or so. I do have brand new woods and irons on the way. I don't know why. I guess because so I don't look too embarrassing when I show up at these convention or conference golf things. But yeah, what's this golf tax that everybody is actually losing their mind over? And then of course you may be like, well, I don't golf, but I do have unrealized gains. You and everybody else on the free world. What you really need to know. This is from Kiplinger, so it is a name you can trust for the most part, right? A standard unbiased name out there. So I wanted to kind of show you this article real quick. First of all, what is the golf tax? So there is no evidence that Kamala Harris has proposed or supports a 20% or any other golf tax. So there's always been some sketchiness, and I just bought clubs and woods, and I looked up, could I write them off? No, I cannot, right? So anyhow, there's some issues in the IRS law where people think you can write that off as a corporate expense. I read it, you cannot, or I can't find a way to get to yes in the tax code there. But I think that's just one of, whenever you have these elections, you always get these hot button things that go taken off on social media. And some of them just aren't true. And this one is not true. However, the unrealized gain tax is true, but it's also being kind of misrepresented. This morning, I saw no less than two of my good friends losing their minds on the internet about how they can, you can buy a stock and it doubles and you pay your unrealized gains on it, and then it drops back down to even and you sell, and you didn't make any money, but you paid gains. You paid taxes on something you didn't make money on. It's like, okay, well, let me just draw your eyes to something here to maybe settle everybody down. This is for folks have a net worth exceeding 100 million. So if you're on Facebook, you probably don't have a net worth exceeding 100 million. I probably offended somebody out there with that comment, but I stand by it. I stand by it. You got 100 million, you're probably not surfing Facebook and Twitter and airing your grievances on how the world is against you and how it's going to end if somebody or somebody else gets elected. That's all I'm saying. So this is not affecting what people would call the average Americans. If anything, I think they come down here and say this would affect an estimated 11,000 people in the US. Hey, I get it. Now, I will say, flashing back, and you've heard me tell a story before if you're a longtime listener, but I lived in Florida in the late 90s, and they had a wealth tax. And it was, if you're over, I think, $1 million, you had to pay an additional tax based on your net worth. And that was, I looked at it, I was not in that category, but I was also not that, I had stuff, right? It started when I was 16, so I'm in my late 20s now. And I'm like, ooh, I better actually look at this. That was kind of, it's hard to value a lot of things. Obviously, if it's a statement from Schwab, that's easy to value, right? It's like right there in front of you. But if you're talking, even houses or rental properties or businesses, what's the true mark to market value on these things? Oh my gosh, this would be an enforcement nightmare to go through. Not saying we're not going to do it, but if you target the people with 100 million in net worth and above, I also think that I don't know, I'm not there, but I do forecast that if I am ever there, I probably do have 2 to 3 lawyers in my inner circle, and lawyers do their thing, right? They interpret the law and then they facilitate you navigating it. So good luck trying to enforce this, right? Because the lawyers on the rich side are probably going to be pretty good and find a way to, maneuver around it or mitigate it or whatever. So anyhow, it's a very challenging thing. I do think by throwing it out there, it's a rallying cry of soak the rich. I get that. And I get why the Democrats find that attractive, right? So, but anyhow, so what's my call? I don't think it's going to happen. It's been talked about before. I think it's a good thing to talk about, but really in actuality, it's just not going to happen. Okay, what could happen very easily is the capital gains tax rates could go up. Right now, if it's short term, you use your income tax bracket, of which the highest is 39.6. There could be a net investment income tax. Here's the paragraph. Right now, if you're above, I think 250,000, it's like 2.5 or 2.8%. I don't know the exact number, but yeah, you can exceed it, and normal people can hit that. That's a great income, but people do hit that. And if you have gains, then that can move you up a little bit. But if you were to do a full 5% on top of the 39.6 you're already paying, you're getting towards that half. And I don't know of anybody out there that thinks close to half of your income should be taxed no matter where you are, right? That's just not kind of the US way to do things. So I don't know if this could ever really get passed or not. Maybe it could, but it's a lot easier to enforce than the unenforceable, unrealized gains sort of thing. So that's what I have for you. It's all about, painting the picture of going after the rich and providing, the best opportunity for the middle class out there is the narrative, but not everything you hear out there is true. All right. That's
Hey, Steve,
all I've
wait, I got one question.
Mike's not going to be able to let that go without a golf comment, I bet.
I can't. I'm thinking a progressive tax on golf where if you shoot over 100, you pay additional tax because you took additional shots. Thoughts?
I don't know, man. That's interesting. I would have to say at my skill level, I don't like that tax at all. Right. Or
It could go
taxing an environmental fee for every golf ball I lose. That's not good.
There you go.
Right. So I don't know. There's between skins and side bets and there's enough money being exchanged on the golf course. I don't need the government to be putting their hand in there as well, right? I'd probably end up on the wrong end of that. So, all right. Anything else, Mike, on what we've got for today?
That's all. That's too fun.
All right. Appreciate you guys listening today, and we will be back with you tomorrow. Have a good one. Bye.